Imagine being denied a car loan, an apartment, or even a basic credit card. Not because you have bad credit, but because you have no credit at all. That's right. No history equals no trust in the eyes of lenders. But what if there was a way to build that trust without going into debt? Stick around, because we're about to uncover a financial tool that promises just that. But does it really work? Let's break it all down. Number one, what is a credit builder loan really? A credit builder loan is not your typical loan. In fact, it's a little backwards. Instead of getting money up front and paying it back over time. With a credit builder loan, you pay first and get the money later. Weird, right? Here's how it works. Let's say you sign up for a $1,000 credit builder loan. The lender puts that $1,000 into a locked savings account. You don't get access to the money yet. You make monthly payments, maybe $85 per month for 12 months. After that, once you've made all your payments, you get the full $1,000 back. Plus, your payment history has been reported to the credit bureaus the entire time. So essentially, you're saving money and building credit at the same time. It's like financial two-for-one. Number two, why would anyone do this? Let's face it, building credit can feel impossible when no one will approve you for anything. Credit cards? Denied. Personal loans? Nope. Apartment leases? Not without a cosigner. This is where credit builder loans come in. They're designed for people with no credit or very low credit. Think of it like training wheels for your financial life. You prove you're responsible, month after month, and the credit bureaus reward you with a growing credit score. And with a better score, you unlock better interest rates, better apartments, better job offers in some cases, and yes, better credit cards. Number three, what's the catch? Let's talk about the elephant in the room. If you're giving the lender your money up front, why not just save it yourself? It's a fair question, but here's the truth. Saving money doesn't boost your credit score. Credit bureaus don't care about your savings account. They care about how well you handle debt and payments. A credit builder loan fakes that for you in a safe way. Still, there are fees to watch out for. Some lenders charge application fees, interest on the loan amount, or penalties if you miss a payment. And if you do miss payments, it could actually hurt your credit instead of help it. So it's not risk-free. Example, let's say Lisa takes out a $500 credit builder loan. She makes her first 3 payments, then forgets one. That missed payment gets reported, and her credit score drops, despite trying to build it up. Number 4, how much can it improve your credit? So, let's get to what you really want to know. Does it work? And if so, how well does it work? In a study by the Consumer Financial Protection Bureau, people with no existing debt saw their credit scores increase by around 60 points after completing a credit builder loan. 60 points can mean the difference between, sorry, we can't approve you, and welcome to your new apartment. But that's not all. If you combine it with good habits, like paying all your bills on time and keeping your credit utilization low, you can see even bigger jumps. Remember, credit scores are a combination of factors. Credit builder loans target one of the biggest, payment history, which makes up 35% of your credit score. That's more than any other single factor. Number 5, real people, real results. Let's meet Jay. Jay was fresh out of college, no credit cards, no car loans, nothing. Every time he applied for credit, he got denied because he didn't have any history. So he tried a 12-month credit builder loan from a local credit union. He paid about $50 a month. It wasn't easy. He had to budget carefully. But 12 months later, he had a $1,000 check in hand and a credit score high enough to get approved for his first apartment, without a cosigner. Another example, Maria, she moved to the USA from another country. She had a good job, stable income, but no credit history. She used a credit builder loan and saw her credit jump from 0 to 690 in under a year. No joke. Number 6. Where do you get one? Not every bank offers credit builder loans, but you can usually find them at credit unions, community banks, online lenders, some fintech apps like Self or SeedFi. Look for ones that report to all 3 credit bureaus, Equifax, Experian, and TransUnion. If they don't report to all 3, you're leaving potential credit score points on the table. Also, make sure they don't charge hidden fees. Read the fine print. Some charge an upfront fee. Others sneak in interest charges that eat into your savings. Ask questions before you sign anything. Number 7. How to maximize the benefits. If you're going to do this, do it right. Here are some tips to make the most of a credit builder loan. First, set up automatic payments. That way, you never risk forgetting a payment and hurting your score. Second, check your credit reports regularly. Make sure your payments are actually being reported. Third, treat it like a real loan. Even though it's your own money, missing a payment can damage your score. Fourth, keep your bank statements or payment records. They might come in handy when applying for future credit. And finally, once your loan is complete, don't stop there. Build on that momentum. Apply for a secured credit card or become an authorized user on a family member's card. Keep growing. Number 8. Is it right for you? Not everyone needs a credit builder loan. If you already have good credit, this probably isn't for you. But if you're just getting started or rebuilding after financial trouble, it could be a safe, affordable, and smart way to get your foot in the credit door. If you're the kind of person who needs structure to save money, this adds accountability. And if you're aiming for that first car loan or apartment, this can be your stepping stone. But it only works if you're consistent. Discipline is the name of the game here. If you can handle that, then yes, it really works. Number 9. What are the alternatives? Maybe you're still unsure. That's okay. There are other ways to build credit. Secured credit cards. You put down a deposit and borrow against it. Authorized user status. Get added to a family member's credit card account. Rent reporting services. Some apps report your on-time rent payments to credit bureaus. Each of these has pros and cons. Secured cards require upfront deposits, just like credit builder loans, but they offer ongoing usage and rewards. Authorized user accounts depend on someone else trusting you. Rent reporting works, but only if your landlord cooperates. Credit builder loans are unique because they're structured, predictable, and designed solely for boosting your credit. That's their main superpower. Number 10. Can you pay off a credit builder loan early? Yes, you can. Most credit builder loans let you pay them off early without penalty. But before you rush to do that, consider this. The whole point of a credit builder loan is to build a consistent payment history over time. If you pay it off in 2 months instead of 12, you're cutting short the timeline lenders use to measure your reliability. For example, if Jenna takes out a $600 loan for 12 months and pays it all off in the second month, she only builds 2 months of payment history. That's not nearly as valuable as showing consistency for a full year. If your goal is to build credit, stick to the schedule. Even if you can pay it off early, that doesn't always mean you should. Number 11. What happens if you miss a payment? This is where things can go sideways fast. If you miss even one payment, most lenders will report that to the credit bureaus. That negative mark could stay on your credit report for up to 7 years. Ouch. And remember, these loans are supposed to build credit, not destroy it. That's why it's so important to set up automatic payments or alerts. Let's say Marcus signs up for a 24-month credit builder loan but forgets a payment in month 6. Instead of seeing a nice credit boost, his score dips, and now he's paying for something that was supposed to help him. One missed payment could undo all your progress. Number 12. What credit score do you need to start? Here's the good news. You don't need any credit score to qualify. That's the whole point. Credit builder loans are designed specifically for people who are new to credit or recovering from bad credit. There are no hard credit checks in most cases, so applying won't hurt your score either. For instance, Olivia moved to the USA for grad school and had no credit history. She applied for a credit builder loan from an online lender and was approved instantly. 12 months later, she had built a solid credit foundation and used that to get a regular credit card with no deposit required. So if you're starting from scratch, this could be your perfect first step. Number 13. Do these loans charge interest? Yes. Many credit builder loans charge a small amount of interest. It's usually between 5% and 16%, depending on the lender. Now, that might sound frustrating. Why are you paying interest on your own money? Here's why. That interest covers the lender's cost for managing the loan and reporting your payments to the credit bureaus. But don't panic. The total cost is often low. Let's break it down. Say you borrow $1,000 for 12 months at 10% interest. You might end up paying $50 to $80 in total interest over the year. For many people, that's a fair price for a solid jump in credit score. Just make sure the lender is reputable and transparent. Always read the fine print. Number 14. Will it hurt your credit score when it ends? You might be wondering, if a credit builder loan helps my score, will closing it hurt it? Good question. Here's the answer. When the loan ends, your account closes. And yes, closing an account can cause a slight dip in your credit score temporarily, but that dip is usually very small. The positive payment history you built stays on your credit report for up to 10 years. That long-term benefit far outweighs any short-term dip. Think of it like working out. You might feel sore after a workout, but you're still getting stronger. The key is to keep going. Use the credit builder loan as a stepping stone to other tools, like secured cards or retail accounts, to continue building your credit journey. Number 15. Is there a minimum or maximum amount you can borrow? Most credit builder loans range from $300 to $1,000. Some go up to $2,000 or more, but that's less common. The goal isn't to borrow a lot of money. It's to build consistent, positive habits. Choose an amount you can comfortably afford to pay each month. If your budget is tight, even a $25 monthly plan can work wonders. Don't stretch yourself thin just to chase a higher score faster. It's not about how much you borrow. It's about how well you repay. Remember, it's not a race. Slow and steady wins this one. So, do credit builder loans really work? The answer is yes. If you work them, they're not magic. They're not instant. But for the millions of Americans with no credit history, they can be the beginning of financial freedom. It's like planting seeds. The growth won't happen overnight, but if you water it consistently, you'll see results. The question is, are you ready to get started? Or are you going to let another year go by without building the financial future you deserve? Let me know in the comments. Would you try a credit builder loan? Or have you already used one? What was your experience like?